In this video, we're going to be talking about Wisr ASX WZR. This company is all about providing personalized loans to Australians in a fast and fair way. And fun fact, this company is actually Australia's first neo-lender, and a big focus of this company is on technology because it's a fintech company. Hey guys, my name is Faizi and this channel is about finance and investing, and today we're going to be talking about Wisr's current share price, what the company does, its financials, and my personal opinion on the stock. Before we begin, this video is not financial advice. I'm not a financial advisor. We're speaking in a very general sense only. Please do your own research. I just have a passion for investing in finance, same as you. So let's get into it. Starting off with the company's share price, we can see that back in the days, it used to be pretty high at over $1.25 roughly. And back then, these guys were known as DirectMoney. But after March 2018, they did a rebrand and changed their name to Wisr, changed their logos, and I feel like now it looks much more modern and much more friendly to millennials and the younger population. Looking at the 5-year return for this company, it is about 156%. Looking at the 1-year return, it is somewhere around 128%. But of course, just keep in mind that 1 year ago we had the big sell-off, so the returns are going to be a bit skewed. And looking at the returns just before the March sell-off, we can see that the share price fell a sharp 72% and it got hit pretty hard. But looking at the share price's current levels, we can see that it's been mostly trading between that 17 to 25 cent mark for the past 9 months. So let's look at what the company actually does exactly. Now for Wisr, their whole mantra is about providing fair personal loans to Australians, which I mentioned in the intro. But what does that exactly mean? Well, basically it means that good borrowers are going to get a good rate and bad borrowers are going to get a bad rate in a nutshell. So what that means is that they give out personalized rates based on the customer's own situation and mostly their credit score. And they use two of the biggest credit bureaus being Equifax and Illion. Now guys, an interesting value proposition that Wisr has is the fact that for people who have strong credit, their rates can be potentially 5% lower than the big four banks, which for me is very good to see because they're very competitive when it comes to competing with the big players in the market. Because if you think about it, in this dynamic environment, we have people who have different situations, different circumstances, and you can't just give every single person a blanket rate because they're all in a different situation. You have to tailor the interest rates and make it personal to them. Plus, as a customer, if you've been good with your money and you've been good with your credit, you want to get some sort of reward for that, and Wisr does exactly that. Now guys, you're probably thinking, great, Wisr gives out personalized personal loans, but where is the real value for the customers? Let's have a look. So in this slide, you guys can see that the main value proposition for Wisr is the fact that number one, they have a financial wellness platform, and number two, they have the digital lending platform. So firstly, let's have a look at the wellness platform. So this platform is basically something that these guys have built from the ground up. It's proprietary and this is aligned towards financial wellness. As you guys can see, there are 4 main offerings like the Wisr Credit, where customers can check their credit score. You've got the lending component where customers can apply for loans directly through the app. You've got the app itself, and then the partnership referral where Wisr can add different revenue streams through the actual app. So through this wellness platform, the customers have a one-stop shop to get all of their wellness needs. And as we can see, based on the customer growth every 2 months on this graph, they're on a steady track to reach 1 million customers on their wellness platform. So for customers, by using this wellness app, they've been able to increase their credit scores, pay off debt by using their roundup feature, which is kind of like Raise, where this app basically rounds up their transactions and pays for the debt with the roundup. And even customers who have a pretty low credit score, being in the sub 500s, they have seen a nice increase as well, as you guys can see by this graph. So when customers sign up to this wellness platform, they essentially get added to Wisr's overall ecosystem, and then Wisr is able to analyze their spending habits, their money habits, and how quickly they pay down debt. And then based on that, Wisr can send them personalized lending offers to increase conversion. So as you guys can see, investing in this wellness platform is paying off because this method is 70% more cost effective to acquire customers as opposed to the marketing team running ads all the time and seeing what works. And we can see in this slide that for customers using this wellness platform, although conversion generally takes some time, it eventually does happen because we can see that 1/3 of the customers convert to an actual loan within 30 days. Then you have the next batch, which is 1/3 once again, which convert in between 1 to 6 months. And then you have 6+ months, which is 33% as well. So essentially by using this platform, customers are getting added into this sales funnel. Now, the other main value proposition for Wisr is the digital lending aspect of it, because The loans can be all done online. I mean, some banks out there are really making customers fill out physical paper forms, which are handwritten, and they waste so much time and energy, and that method is not very modern, so Wisr is doing pretty good in that regard. And additionally, Wisr has been able to attract good credit borrowers as well, with Equifax credit scores of over 700, which is generally considered pretty good. And looking at the 90-day arrears, that's been halved as well, which will ultimately mean that Wisr is able to make more money. The NPS has improved as well, which is quite nice to see, because if you compare this to some of the banks out there, it's a night and day difference. And recently they've got access to a warehouse facility, which means that they can originate loans from their own balance sheet, which increases their margins by quite a lot. And they've been able to expand their loan book pretty quickly, as you guys can see by the blue section of this graph. And based on the current revenue run rate, they're on a path to reach $1 billion in loans. However, it's very important to note that this is not a forecast, and if you read the fine print on this exact slide, Wisr will tell you this. Alright guys, so let's talk about the financials of this company, but before we do, if you found value so far in this video, please leave a like and subscribe. It really helps out with the YouTube algorithm. Let's have a look. Starting off with the P&L for this company, we can see that revenue has increased quite massively from 2.2 million to nearly 10 million, and this is a 353% increase, which is very phenomenal. And we can see that their warehouse facility has really been doing all the heavy lifting, and it was a solid move for the company. Looking at the expenses for this report, there are two things that mainly stand out to me. Number one being the marketing, and number two being the finance costs. And having a look at the marketing expense, it's gone from 1.6 to 3.1. It's basically doubled, and obviously with their strong growth, they want to keep on pushing their marketing channels to acquire more customers and keep the growth growing, and keep on monitoring the performance of each marketing campaign, optimize and rerun the campaign. And the finance costs have increased from 200k to 2.4 million because recently they've raised some money by borrowing, so this is why there's an increase. Now overall for this company there is still a loss, however the loss has decreased by 3.5 million, but based on the figures, and if we extrapolate these figures out to the next few reporting periods, they are on the path to profitability. The question is when? And I wish I had an answer to that, but let's have a look at how they're able to sustain their losses moving forward. Now looking at the balance sheet for this company, we can see that the cash and cash equivalents sit at 27 million. So this company is able to be sustainable for the time being. And I also want to talk about the huge loan receivables of 204 million on the balance sheet. And these receivables are basically money that they've lent out, which they expect to be repaid back to them. Now, an interesting thing about this 204 million is the fact that after taking into account all the people that may default on the loan and may not pay the loans back, this 204 is the figure that we're left with afterwards. So the gross loan receivables is actually 210 million, but after taking out the people who may potentially default on the loans, we're left with 204 million, which is a good sign because this is a massive bulk of their loans, which is expected to remain. The debt to assets ratio of this company is 85%, which is a bit too high for my liking, and personally I am a bit concerned about this because we're nearly pushing to that 90% mark. The previous debt to assets ratio was 69%, so it's gone up substantially. Now in the future for this company, if more liquidity is needed to correct the company's capital structure to be less debt heavy, they can probably do a capital raise given that their stock price has done pretty well in the last year or so. Looking at the cash flow statement, we can see that the receipts from customers has increased from 1.2 to 8.4, which is a massive increase. This is nearly a 600% increase, which is just phenomenal, while the payments to suppliers and employees did not grow by the same amount, which is the standout thing for me in this whole statement. It's also good to see this company taking advantage of the R&D tax incentives from the government by continuing to develop in their proprietary platform and making sure that people are using their platform and getting into financial wellness as much as possible. Now, although the operating cash flow was negative for this company, it is showing slow signs of improving, and the main cash injection in the business was through its borrowings of 117 million, as you guys can see right here, which we spoke about earlier, which ultimately leaves their cash position up $17 million from the previous period, which is good to see. Now, what do I think about this company? Let's talk about it. So personally, if you guys know my background, I've been working in the banking and financial services sector since I was 18 2018. I've worked with big banks and a fintech company as well, so I've seen lots of different things over the past couple of years. And the way that these new forward-looking fintech companies approach finance and money is way ahead of the big banks by miles. Because these guys are able to adapt very quickly and give the customer the right solution very quickly. In the case of Wisr, we can see that the financial wellness platform is working really well and it's growing, and it's definitely rewarding good behavior. And as a result, their net promoter score is quite high when compared to the big banks. So I think from a customer value perspective, they're doing pretty well. That financial wellness platform is basically acting like a long-term sales funnel, and it'll be interesting to see how much customers they can keep on converting when they keep on bringing customers onto it. Currently, as the company stands, their figures so far and what their growth opportunities could be in the future, not just through increased loan originations, but through referral partners as well, it presents a pretty good opportunity. Currently, the share price is trading between 17 cents to 25 cents for the past 9 or 10 months. However, when the next update comes out, I'm really hoping that this will be the next catalyst to push this company beyond that 25 cents mark and into the 30 to 40 cents mark. Hopefully. Personally, I haven't invested in this company just yet. I'm just waiting for the price to dip even more. So for now, it's on my watch list, just like I have Dough and IOU Pay on my watch list right now. These two are also companies who have a strong potential upside if they can deliver. So check these two videos out. And guys, please like and subscribe, and I'll see you in the next one. Bye now. And additionally, Wisr has